because there was a massive market order on a double top, huge market order. As soon as it hit that level, oh, this was the most frustrating one. So today I hit a negative 1.42% day, which is too high. So going forward, I will have a 0.5 max stop, and then I will take notes and I'll go over why my trade didn't go according to plan, if I followed all my trading rules, etc. That is going to be a hard stop rule from now on, period. That is it. I can see when a reversal is coming, and it's blatantly obvious that it's coming, and I hesitate to go into long positions because I'm short bias, even though I know it's going to come back up and retest this level. So I think I need to paper trade reversals and play that to my advantage, because right now I have shorting below the 90 MA and watching for support and resistance levels, right? But if I can paper trade and get the skill of reversals, when the trend is changing, I can switch my position to a long to retest the area where I think it'll bounce back with a continuation. So if I was able to do that, I could capitalize on both swings of the market. I could wait for the reversal. So first of all, I could wait for the bullish trend to change to a bearish, and from bearish to bullish. If I could hone in on those two abilities, because I'm pretty good at shorting below the 90 MA and support and resistance levels, but I need to work on the bullish reversals. If I could just work on those two skills, I would never have to do any other strategy. Yeah. Figure out what you're good at and get better at it. And then figure out there's a contrarian side to that where you're like, okay, like if you can read that the market's reversing, build some confidence in that area. And I think that if I hit my max stop of 0.5 when I'm trading, I'm going to write down my notes, figure out why my trade didn't go according to plan. Maybe I followed all my rules and that was fine. From then on, I will probably paper trade and test or train in reversals. So I hesitate on longs, and I know this for a fact, but I always exit my good trades early and then let my bad trades run too far. Normally I'm pretty good with criteria like, let's say, a close above the 90 MA, I'm out of the trade. And normally I can exit, but there's some times where I don't, and that needs to be improved. On high likelihood short or buy areas, so for example, a double top, today this happened and it was brutal. There was a double top and I entered a short position. I saw brief weakness, entered a short position. I was testing out shorting double tops. And there goes my pen. And because there was a massive market order on a double top, huge market order. As soon as it hit that level, I had a ask to exit my position to cover my short. I had an ask plus 1 or 2. I think it was a plus 2. Wow. I hit to cover my short because the price was moving above this level and it looked like volume was picking up. My buy order did not get filled because the price moved too quickly. So I had to manually go back in and then change it to ask plus 5 to exit my position. Cannot happen again. So in those high volatile areas and in general, I should probably have a ask plus or a bid minus, if that makes any sense. It just means that I'm willing to sell at a range of price within a 5-cent window or buy at a range of a 5-cent window. So that was huge. I'm definitely going to be instilling that. I realized a loss without giving the trade its exit criteria. So I didn't like what SPY was doing, but my asset I was trading, which was Tesla, did not give me the signal to exit the position. Oh, this was the most frustrating one. And I exited because of emotion, and then the trade went my way in a big way. Like it went exactly what I thought was going to happen, and it was painful to watch because of my lack of self-control. So that is, yeah, that hones more in on following your trading plan. And then rushing or FOMO into a setup equals poor performance. Patience equals reward. So at the end of the day, I didn't want to trade anymore, but I was waiting to see what the market was doing. And then I saw a beautiful bearish reversal, and I traded it, and it ended up, yeah, making back some of my losses. But this is the big area where you have to be careful, because if you don't have self-control and you do what I just did today, this leads to people failing at this. So this is a kick in the pants for discipline. Follow the plan and on the asset you're trading. And I underlined that today. So that's a lot of mamble, whatever. But I figured I would just give you guys like the honest truth of how it went today. And this is the charts here. That's Tesla. But yeah, so that's kind of what I'm dealing with. I'm going to definitely be doing a write-up on this and pasting it where I can see it before I trade for the day, go through my trading plan, and prep myself emotionally before I start the day. That was a long video, but thanks for watching.